Hi, y'all. I'm John Ratanti, a portfolio manager at Bastion Fiduciary and one of the hosts of Rebellious Allocations, which is our Bastion Fiduciary podcast. The date is November 12th, 2025. Today, I'm joined by Will Kerwin for part 2 of our business deep dives. As a reminder, for part 1, we discussed KLA Corporation, ticker KLAC. And today, for part 2, we'll be discussing Arista Networks, ticker ANET. I own shares of both KLA and Arista in the portfolio I manage at Bastion Fiduciary. Will Kerwin is a senior equity analyst covering technology at Morningstar. He covers a wide variety of technology companies, including hardware, semiconductor, and IT supply chain. And there's a lot of overlap between his coverage universe and the high quality universe I focus on at Bastion. Today, I'm going to ask Will all about Arista, which once again is a stock I own in the Bastion industrial and infrastructure portfolio. So, Will, welcome back to the show.
Good to see you again, John.
You too. So before we jump into questions, I want to give some very high-level company statistics so listeners get a gauge for the size and scale of Arista's business. Arista has a market cap of about 172 billion. That's 172 billion, and net cash of about 10.1 billion. So its enterprise value is closer to 162 billion. Arista has total assets of about 18 billion. So its net cash actually makes up about 56% of the total assets on the balance sheet. So this is a very, very cash-rich firm. Finally, in the trailing 12 months, Arista generated revenue of nearly 8.5 billion and net income of about 3.4 billion. So clearly, it's also a very profitable business with trailing 12-month net profit margins of about 40%. Okay, so to those questions. Will, can you give us a just really brief history of Arista? When was it founded? Why was it founded? What problems was it trying to solve at the time? And who is Andy Bechtolsheim and the other co-founders?
Yeah, so it was founded in the early 2000s, 2004, I believe, really as kind of one of the first Cisco competitors. And this is a little bit before my time, but Cisco has always kind of been the preeminent force in enterprise networking, and especially was a very attractive stock during the dot-com bubble and subsequent burst. But yeah, so it was Andy Bechtel's team and Ken Duda, who are two very engineering focused founders, very technology led. I believe came out of Sun Microsystems, founded Arista to really go after Cisco with what they thought was a better technology proposition. And both of those founders, there's a third founder too, actually, but those two founders that I mentioned, they're both still with the company. Ken Duda is the CTO, recently promoted back up to that role. And Andy Bechtel's team is the president of or director of an AI unit or something like that. So those original founders still kind of leading the technology roadmap there.
Yeah, that third founder is a guy named David Sheraton, who, like you said, not still involved with the day-to-day operations of Arista, but he was one of the very early investors in Google, now Alphabet, which is another company that we own in the Bastion portfolio that I manage. And he invested $100,000. This guy, David Sheraton, and he's now worth, I think, about 20 billion because of his very early, I think it was like seed investment in Alphabet. Yeah, so really good investor there, I guess.
Yeah, I probably wouldn't have a day job if I had $20 billion too.
That's right, but I think he's still a professor at Stanford, so loves what he does. Andy, by the way, was also an early investor in Alphabet.
Yes,
so,
I knew that.
So Arista's CEO and chair is Jayshree Ulal. When did she join the team, and what was her background at the time?
So she has been the CEO as long as it's been public, so since 2008, and she was formerly of Cisco. I think she was a executive there, senior vice president, something of that sort. And the way I've seen this is kind of the founders are really much the technology leaders, but Jayshree brought in kind of the tech executive experience, so to speak, and really truly has thrived in that CEO role. She's a great presence on the earnings calls too. If you listen, I think a very refreshing voice compared to a lot of just tech management teams that we cover. And so I think she kind of brought that executive leadership, allowed the founders to continue focusing on the technology. And I think the bifurcation of those roles between kind of, CTO and CEO has, you know, reaps extraordinary rewards for Arista.
It has reaped extraordinary rewards for sure. Okay, so now we have kind of the founding story. So please tell us, what does Arista do? What products does it provide, and who does it sell these products to?
So this is all what we call enterprise networking. And so think of this really as just connections between computers, between servers, between data centers, etc. Any point of compute, so whether that's your PC, whether that's your mobile device or anything like that, eventually this has to go through a wired connection. And enterprise networking is primarily wired connections. There's also, the ability to do a Wi-Fi portfolio there, but not cellular. But yeah, connecting servers to each other, and that really forms the plumbing, if you will, of the modern internet. And so what Arista does is it provides primarily switches and then also routers, and essentially, these are just the boxes that fit into a data center or into an office building to fuel all of the wired connections towards Wi-Fi access points or other servers or a wired connection to a PC or anything like that. So data connectivity is maybe a more precise word, but enterprise networking.
Perfect. So you mentioned switches, routers. What are their main hardware products today? Like, what versions of those switches and routers are they on? Where is the product roadmap going? What products or iterations, are they on today, and do you see in the pipeline?
Yeah, so it's hard to kind of nail down any specific product. I mean, really, Arista is actually quite focused when you compare them to a peer like Cisco because they exclusively focus on the switching piece of enterprise networking. And they forego some of the other auxiliary pieces like a Wi-Fi portfolio or at least as much of those auxiliary pieces or even routing, and they really focus on this simplified architecture. And so, pretty much all of their products are going to be considered switches. It gets a little confusing because you can call some switches a router, and so I won't get into that. But yeah, these are the boxes that really form the base of that connectivity that servers plug into. And in terms of where the roadmap has gone, it is not necessarily in terms of an evolution into a new product, but it is just the scaling of that product. So you can think about this via speed of connections. Back in the day, having a 10 megabit connection used to be one of the highest speeds that you could get. Now we're talking about not just gigabits, which are 1,000 megabits, but hundreds or 400 or 800 or 1,000 gigabits. And so there's just been kind of this exponential rise in the network speeds. And so in terms of the product pipeline, it is allowing for faster speeds. What these products look like is they're kind of a big box with a lot of ports. Like if you've ever seen an Ethernet port on a PC, that is literally the ports that you see in these boxes. And it is each individual port can carry a specific speed. And so it's either scaling to more of those ports or higher speeds at each or both. And so, the simplest way I would describe it is we've kind of been in the 400, 800 gig era in networking. And it looks like over the next couple of years, we're going to transition into 1.6 terabit, which is 1600 gig.
Like you said, it's been exponential rise in the bandwidth speeds. And the way that I think about it, it's like AI workloads require much more bandwidth than traditional cloud networks. And as the number of GPUs increases, the amount of data going through those GPUs and the speed of the data going through the networks also increases. And so you're just going to, I think, have this continued upward trend in the bandwidth speeds needed to run these big data centers.
Yeah, and I think we'll talk more about AI later on, so I don't want to kind of spoil it, but our one of our bigger theses on enterprise networking is that it really is a bottleneck in those AI networks, because the way that generative AI models work is it's all about having thousands of GPUs to work as one unified computer, and that relies on the networking between them. And networking, the pace of development has always been fast, but it is now a bottleneck in AI in the development of these models more so than the compute power of the chips. And that sounds like a bad thing, but that's actually, I would say, a good thing for someone like Arista, because they're in such high demand. And the more that they can develop, the better they can do. They're not demand constrained in any way.
Yeah, yeah, definitely. Please talk to us about their EOS software. What functionality does it have, and why does it make Arista stand out?
Yeah, this is the secret sauce, I would say, of their technology. And, you know, we view Arista as the best in class at the highest speed networking. So at kind of the top end of the technology range, the highest performance, what you're seeing in a hyperscale public cloud or an AI cluster, Arista is the best performance. And a lot of that comes down to the software, because how these boxes are built up that they sell, they're actually based on a chip that they don't produce. They're based on a Broadcom chip, and then there's a lot of auxiliary hardware around them, or around that chip, but that is more replicable in our view. They have definitely hardware design expertise, but the software is really what allows all of that hardware to hum. So I kind of think of the that base chip is kind of the core building block that allows for kind of a ceiling of performance, and then the software is what allows you to reach that ceiling. And so the EOS software that Arista has, it really spans the gamut. So there's a level of just kind of base software to get all of the hardware pieces of the switch to run in tandem and to achieve those high speeds. But there's also a huge amount of network management that happens. If you think of networking, it's a very big ask on an IT department. And so any networking company will provide these dashboards for IT professionals, if there's an outage, if there's a potential cybersecurity breach, et cetera, to be able to view that. So the dashboard is one of those. I'd say threat management, kind of cybersecurity is built into it. And then, frankly, just continuous and automatic updates and patching to the software to improve the efficiency, the operation of the network. And so those all sound pretty basic, or at least like they do to me. But when you really think of it as the holistic package, it just allows you to get the best performance out of these switches. And they have been really software led since their founding. And I think just have such a lead in that arena, where someone else like a Cisco can buy the same chip from Broadcom, but they cannot achieve that same high speed performance as Arista, because of all of the other elements that go into that. And a large part of that is software.
And that software runs across their whole portfolio of hardware, I think.
Yes. Yeah.
It's like one common platform runs across their whole platform.
Yes. Yeah.
So if you had to summarize Arista's value proposition for us, what would it be? What value are they really providing their clients?
I think it's what I just said. I think it's just the best performance. And so we, mentioned AI earlier. If you think about places where you are willing to pay up to get the best speed, the best performance, Arista is going to be the choice there. And so we see Arista really doing the best in, AI networks or public clouds, hyperscalers like, Google, AWS, Microsoft, that have such massive networks, and they need some of these highest speeds to enable selling that cloud capacity to customers. And so Arista is almost exclusively selling into high speed data centers, because that is what they're best at.
So Arista has this slide in their November 2025 investor presentation that shows Arista has consistently taken market share in both dollars and the number of ports from Cisco almost every year going back to 2012. Now, I'm sure Cisco is still a very good business, but what is driving that consistent market share gain from Cisco? Does it go back to the value proposition you just talked about? Is it because they have the best networking team, led by Andy Bechtolsheim and Ken Duda? Is it because of that EOS software? Is it because they're a pure play, but Cisco is more diversified, and so they're trying to juggle more balls at one time? Why do you think they've been able to take consistent share almost year in and year out from Cisco?
All of the above. So this has been a big story for those that are familiar with Cisco, I think, is that when the public cloud really started to take off in the early 2010s, Cisco had this dominant market share in total networking. And they did not really invest to or see that public cloud transition happening. And so Cisco had very good relationships with large enterprises, but they didn't work to deliver the performance of a cloud scale network. And Arista was perfectly positioned for that. So that is kind of what started it. And then everything that follows on is kind of a result of that initial misstep by Cisco, I would say, where they now find themselves consistently just a step behind Arista in terms of the performance at those highest network speeds. And as that market grows faster than the kind of core enterprise market that Cisco still does very well in, Arista is able to take share. And so Arista already has a majority share in those highest speeds. They're developing an even larger share there. And then, as well as kind of those like for like share gains, that's also becoming a larger piece of the market. It's higher growth. And so that also enables just overall market share gains. But I think I would say one big point of confusion that I think I get from investors often is this is not a zero sum game between Cisco and Arista. And they almost operate in two completely different markets. They are competing against each other in Arista's market, but what Cisco does best at is kind of extremely, or it's adjacent to it. It's outside of that. It's campus networks. So think of, rather than in a giant data center for AWS, think of a home office or even a large office building. You would call that a campus environment or literally a college campus to use the name. Even on premises data centers. So if the Morningstar office were to house a small data center in the bottom of the building, that networking Cisco would do very well in. And so they do better in kind of these enterprise environments where there's a little more of a high touch sales motion. They offer a much broader portfolio, so they can offer you kind of a turnkey solution. But where Arista does the best is in those very large, very sophisticated customers that just want to pay up for the best performance, and they can kind of do all the rest. And so they're operating next to each other. Both are doing very well. Arista's is the higher growth market, but we like both companies, and they're just kind of operating alongside each other in different market niches, if you will.
Yeah, that's good to know. So sticking with that competitive landscape, I'd like to ask you about another competitor, Celestica. Who are they? What do they do? And are they a big risk to Arista?
So Celestica, in and of itself, I think of them, so they are what we would call a white box vendor. And so, which is a little bit of a different value proposition than what Arista is doing. And so, when I use the term white box, another term would be an ODM strategy. So, an original design manufacturer. And this is kind of like what a Foxconn does in consumer electronics. So, if you are a large hyperscaler like a Google or like an AWS, you have an extremely sophisticated IT team. You can do a lot of the network design yourself. And in fact, you want to because you're able to. So you either want to get the best switches from Arista, or what you can do is you can contract out to an ODM like a Celestica. They are able to then buy the Broadcom chips on your behalf and build kind of a what I would call like a raw box of hardware around them. So there is no software capability on this. It is just putting together the raw components. And what that does is it makes it way cheaper because it's not branded by Arista and there's no software attached. And then you, as a sophisticated hyperscaler, can actually apply open source software on top of that. So Celestica is one of the larger ones, but one of many of this white box opportunity. And it's often talked about in terms of a threat to Arista because they can, again, get those same chips. I think what we've seen time and time again with Arista is that actually the software still matters even for those largest players. And what I would emphasize is that oftentimes, near exclusively, this is a multi-sourced environment. So it is not to say that Arista has a monopolistic share of the network of a Google Cloud or a Microsoft Azure or anything like that. At times, Arista might only occupy about 25% of their network, and then maybe 25% of the other piece of the network is from a Celestica or other white box, and then they might be using Cisco for part of the network. But these cloud players are so large, and those networks get so complex that there are certain applications or use cases where they need the best performance. There are other use cases where they feel they can use an open source software and get pretty much close there. And there are other places where it might be a little bit of a slower speed and they want a little bit more of a security component or a holistic process and they want to focus elsewhere and then they might use a Cisco. So there is a place for all these different competitors in the network. And I guess, the short answer to your question, are they a huge risk? I would say from an investment thesis or from their growth perspective, no. But they are a competitor and they do exist side by side. But in terms of Arista's value proposition that we've talked about, they don't match it because they don't have that software capability.
Yeah, and like you said, it's a large and growing market, and it's not necessarily zero sum. There's room for multiple players in this market. So another stock I own in the portfolio I manage for clients at Bastion is Nvidia. So how much of a risk is Nvidia as they bring more of the networking in-house and they combine their GPUs and their proprietary networking gear like InfiniBand and NVLink into their own next gen, AI server racks? I mean, Nvidia is the AI leader. They are setting the pace of innovation around advanced AI chips, as well as the server racks and clusters. So is this a risk to Arista?
Yeah, I think Nvidia is their biggest competitor at this point. We've always thought of Cisco being the largest competitor, but Arista still leads Cisco in those high speeds, and now Nvidia is making a meaningful entrance into that market. And so, if you had asked me about this about 2 years ago, I would have said because Nvidia has historically relied on its InfiniBand, which is a proprietary technology, competes with Ethernet, which is a little bit more of a household name, and that's what Arista does. Selling point of Ethernet is it's an open source technology. It's ubiquitous across the supply chain, so it's easy to connect Ethernet from Arista to Ethernet from Cisco to the Ethernet port on your PC or in a server or anything like that. It's all formed on an open standard. InfiniBand is not. It's proprietary, but it is best for kind of the highest speeds raw performance and in a very specific way. Ethernet can scale to high speeds, but InfiniBand has this characteristic called losslessness that involves the way that it sends packets of information across the network. And that has made it extremely good for, in the past, supercomputers. It's been a pretty niche application, but now that has actually become a very important metric in the age of AI and in these AI clusters. So NVIDIA gained a lot of share in networking via InfiniBand as AI took off. A, because it had better performance than Ethernet. B, because they were able to bundle their InfiniBand products with their GPUs. So it created a big uphill battle for Arista. And now our thesis, sorry, to get back to 2 years ago, I would have said our thesis is that Ethernet is going to win out here because Ethernet can achieve that losslessness. It just takes some development from Arista and from the likes of others. And then you get all these other advantages. So once Ethernet can match the performance, it becomes again this ubiquitous standard. It's interoperable with existing networks, and it's significantly cheaper because you have multiple alternatives that have to compete in the open market. What we've seen is that is borne out. But what we've also seen is that NVIDIA actually has a very good Ethernet option. And so the Ethernet transition is happening. I think it's a relative consensus view in the market now that networking on Ethernet and AI is going to be the move, but it's just a question of which vendor now. And so, again, I don't think this is a zero sum game. I think NVIDIA and Arista can continue to do very well alongside each other. This is a massively expanding market. And even though NVIDIA is playing there and maybe didn't before in the Ethernet sense, it's growing so fast that both it and Arista, don't really have to eat at each other's business. They can both just take big slices of this expanding market. But, short answer, NVIDIA is certainly a risk with their Ethernet products, especially with that bundling they do with GPUs. And I would say they are kind of the 1A, 1B with Arista in terms of the performance there.
Yeah, just to get some idea of like how large this market is and how fast it's growing, Arista recently gave guidance for 2026 revenue for 20% revenue growth to 10.65 billion, with 2.75 billion of that coming from AI.
Hmm.
And so basically they think that a year from now, 25% of their revenue will be coming from AI, despite, you know, Nvidia really planting a flag in the networking space.
Yeah, and we actually think NVIDIA will have more than that. In AI specifically, we think NVIDIA has the largest share.
Yeah.
And I think that in the long term, that'll work out to be a little bit more of an even split with Arista and NVIDIA. There are a lot of things that go into that. NVIDIA exerts some pretty extreme pricing power and high prices on customers. And again, we think that it'll be a multi-sourced environment longer term. But the AI market is huge, and we think that it's going to be relatively more concentrated than the rest of the networking market, even in those public clouds, because performance just matters so much more than any other application. And so when you have this clear technology lead from Arista and Nvidia, they are going to really take the lion's share in our view. But yeah, it's an enormous market, almost brand new, in the last like 2 years, and definitely the growth engine of networking as a whole.
Yeah, I think that was my point. If Arista is guiding that 25% of their revenue will come from AI by the end of 2026, that was from a standing start of zero, 2 or 3 years ago. And so it's a fast growing and large market. Yeah. So before we get into more numbers, I'd like to ask you about some technical stuff. What is the difference between back end and front end AI networking? And where is Arista strongest today?
So they're strong in both. Um, I would say think of the back end network. This is what's incremental and new in the age of AI. So this is if you envision a generative AI cluster, the connections between GPUs training a model, that's the back end network. That's new, that didn't exist before generative AI. The front end network is really just a traditional data center that has existed for a long time. And so think of this as servers that house applications. Users access these applications via the internet. And so the way I think about it is almost think about it being in two rooms. This is a simplified way, but the backend network is all these GPUs in one room training a model. And then that connects to servers on the front end network that house the application like a chat GPT or like a Claude. And so you as an internet user of a generative AI inference application, you're accessing the front end, the application stored there. The front end is then connecting to the back end to the stored trained model for inference. And then you're getting that output from the back end transmitted through the front end to the user. So AI revenue is actually very hard for these companies to define among their shipments because there is an incremental front end opportunity. There's front end capacity to support generative AI applications that didn't exist before, but you can't really discern which server is hosting an AI app, which server is hosting an app that already existed. So that front end gets hard to define. But since the back end is so new and Arista does well there, it's all right, but Arista definitely has a larger position in the front end in our view, because the front end there isn't a lot of NVIDIA competition. The NVIDIA competition is coming at the back end, and Arista continues to be the dominant force in the front end.
Because of NVIDIA's dominance in the back end and everyone talking about GPUs and training and inference, I think there's a lot of focus on the back end. But as you said, they're connected. And so if back end networking grows, front end networking has to grow alongside of it in order to send that chat GPT request to the end user. It's all connected. And so as back end grows, front end will grow as well. That's kind of how I think about it.
Yeah, and there was definitely a fear, I think, even as recently as a year ago, that the back end would really cannibalize the front end and that there would be this pivot of existing capacity and just converting it. And that hasn't really happened because, yeah, you need this front end capacity was already supporting existing things that still require support. Now you actually don't just add the back end, you need to add more front end to support the
Yeah.
back end.
To
And
support
so
that.
it's turned out to be pretty much wholly incremental. Now, there's less growth on the non AI front end because all the spending is going towards AI, but net, the front end is still growing and the back end is growing extremely fast and is brand new as of, 3 years ago, as we talked about.
Yeah. And as we talk about this brand new market, maybe now's a good time to mention that Arista recently had an investor day and they gave some 5-year targets. And they think that their TAM is much bigger now. I think like as of 2 years ago, they thought their TAM was 60 billion. And then as of like a year and a half ago, they increased their TAM to 70 billion. And then in this most recent investor day, they just increased their TAM to over 100 billion, 105 billion by 2029. And so this back end, it's incremental and it's growing really fast and it's expanding the addressable market opportunity.
Yeah, exactly. And we put out a report last June where we tried to forecast the generative AI networking market. So really
Mhm.
for Arista, for Nvidia, and Cisco. And I mean, A, over the last 18 months, that report, or at least that forecast, has grown incredibly stale because the growth rates just continue to exceed. But at
Right.
that time, we measured the TAM for the market, and this is just AI, at about 8 billion in 2024 and saw it going up to 35-40 billion in 2029. I think that is conservative at best at this
Right.
point, given what we've
Yeah.
seen over the last 18 months. And so, yeah, I mean, there's an easy chance that half of that TAM is AI.
Wow. Awesome. Another technical networking question for you, Will. What is the difference between scaling out and scaling up? And what is Arista's competitive position in each?
The connections in a data center, I think the easiest way to visualize this is you have a server, and that's kind of a single point of compute. And then you stack 8 or so, let's just say 8 for simplicity, servers in a physical rack. And then there's usually a switch at the top of the rack. They call it a top of rack switch. Think of that switch being what Arista does. And there are a lot of different ways to lay this out, but I think that's the easiest way to visualize. So you have these 8 servers, they all are connected to each other through this switch. And that is what we call scale up. Think about it, up to the top of the rack. Then you have, in a data center, thousands of those racks in just rows and rows next to each other. And those all connect to each other. And that's what we call scale out. And so those connect to each other via, you think of each rack getting connected through a switch. Then there are actually these centralized switches that are used. And these are what we would normally call more of a router to connect all of those top of rack switches together. And it is often talked about in kind of this hierarchical topology. Think of a business hierarchy of a CEO and then the C-suite and then VPs below that. But those are all just different layers of switches connecting all of these servers together. So historically, Ethernet, which is what Arista does, has been used for the scale out, and that scale up has actually been able to be used with copper sometimes, just connecting basic cables to them because it wasn't that complicated to connect 8 servers together. It was more about connecting all of these racks together. And so Arista has typically done the scale out, but in the age of AI, these racks are getting larger. So rather than 8, you can have 16 or more servers. You can kind of have this dual rack structure. It's getting a lot more complex. There's a lot more compute. There's a lot more data coming in between all of these connections. And so what it looks like, what Arista's talking about, what Broadcom's talking about, NVIDIA, is that now you're going to have to use Ethernet for scale up and in addition to scale out because those connections are getting longer and more complex. That's a brand new opportunity for Arista. So they don't play in scale up at all right now. It's exclusively in scale out, but they're talking about the scale up opportunity in kind of like a 2027 timeframe. That roughly matches what Broadcom on the chip side has said. I think that'll take some time to really become material, but it's hugely exciting. I mean, like I said, networking is a bottleneck, and it is only getting more important as these models get bigger and the connections are just proliferating within them.
Wow, great description. So we talked about white boxes. Celestica is one provider of these boxes, off the shelf, silicon, off the shelf sort of hardware with no software. What's a blue box? And Arista's offering these blue boxes. So what does that entail?
So Arista's logo is the color blue. So
Hmm.
that's kind of the first hint here. Or is yeah, in a blue color. So blue box is essentially Arista's answer to the white box threat. And I think this is something that's actually very compelling and interesting about the EOS software is I talked about all the features that it has, but they don't really care how many of those features you use. Someone like a Cisco really makes their money and margin on selling this holistic family, this suite of products across networking, Wi-Fi, cybersecurity, and software, giving you this big package, which is great for enterprises. What Arista can do is they can give you all of that software capability, or they can just give you however much you want. And so, actually, some of Arista's sales into hyperscalers like a Meta or like a Microsoft, they are just giving the raw hardware and allowing Meta and Microsoft to put their software on top of it. And I think that kind of shows, like I've talked about the EOS being the secret sauce, but the hardware design is also really important here. And Arista is still the best at that, and able to outcompete the white box even without the software component. And so when they talk about their blue box strategy, it really just means that they can offer you this turnkey suite of software, or they can just give you the raw hardware and say, you've got the open source software to deal with it. And actually, I'm now just remembering that I don't think the blue is actually for Arista's logo. I think it's for the logos of the customers that use this strategy, which are Meta and Microsoft. So they each have their own proprietary networking software. For Meta, it's FBOSS, which I think is formerly named from when they were called Facebook. And for Microsoft, it's Sonic. And so they can apply that software to those raw switches from Arista. They can also do a hybrid where they apply some of that software and they use some of EOS. And so it's this very variable continuum. But I think that's a compelling piece of actually the value proposition of Arista.
Yeah, you mentioned that Meta and Microsoft are two big customers of Arista. So about 50% of Arista's revenue comes from a handful of cloud and AI titans. Do you see this as a risk or an opportunity?
I think a little bit of both. I think a good case study in the risk piece of it is in 2020, is either 2019 or 2020. Meta paused its kind of orders of new data center networking for a year, and that led to a revenue decline for Arista because they were pretty reliant on them as a customer. So anytime you get kind of that lumpiness with one customer, it's certainly a risk. But in the age of AI spending, it's hard to say it's anything but an opportunity in the short term because these companies are spending enormous amounts on their capital expenditures to build out AI. And Arista is a massive piece of the networking piece of that spending. So you'll see their stock do very well actually when Meta or when Microsoft announce CapEx generally. Sometimes, Meta's stock might go down when they announce a lot of CapEx, but Arista stock will go up because the market knows that a lot of that spending is going towards Arista.
Yeah, yeah. Where does the other 50% of their business come from? You mentioned the campus and the enterprise earlier. Is that where the other part of their business is coming from?
I think it's mostly actually other data center customers. So even if it's not Meta and Microsoft, there's some debate about which of the customers they play into, like a Google or like an AWS, or, if you want to start now thinking about neo clouds or someone like an Oracle. So there's definitely a level by which they have these other cloud customers, even Apple's own data centers. They are a pretty significant customer there. So I still think a lot of their revenue is in a relatively concentrated base of large customers, even outside of those primary two. And then you kind of get into a long tail of large enterprises that have on premises data centers. So think of your Fortune 500 companies. And then, yeah, they are starting to enter this campus environment, which has been Cisco's bread and butter. Cisco still dominates, but Arista is picking up some share there. And, this is not a huge amount of share. It's going from 2% to maybe 4% to maybe the higher single digits by the end of the decade, but that's still meaningful growth. And we really like that push kind of down market, I would call it, into the campus. We think those customers are actually stickier. So it's a little bit of both, some of the campus, some of the enterprise, and then just some other large cloud players that are not Meta and Microsoft.
So I mentioned their new estimate for their total addressable market is 105 billion by 2029. What other guidance did they give? They recently had their investor day. They gave 5-year guidance. Can you just talk about their guidance and maybe more importantly, what was your reaction to that guidance? Did you adjust your numbers at all?
Yeah, so their guidance was, yeah, the 20% growth in 26 and then mid-teens growth for the rest of the decade, which is really attractive. It
Especially off a big
did,
base, off of
yeah,
off of 10 billion or whatever in revenue.
I mean, Arista has been talking about the law of large numbers for kind of a while, and yet I think this year they're still growing like close to 40%. So the AI growth is doing wonders. We did not change our estimates after the investor day because it actually fit slash came in a little bit below where we were modeling. And this is I wouldn't call it a gripe, but I think something that investors need to know about Arista is that they are very conservative guiders. It is pretty much nailed on each quarter that they're going to beat guidance and then raise their full year guide. And the market loves that. So, they're doing something right on that front, but it is a sandbag. Their quarterly guidance and I think the long-term guidance too is conservative. And so when you're talking about these impressive numbers of 20 to 15% growth over a 5-year period, and I'm calling that conservative, I mean that is the amount of confidence that I have in them. Now, I will say since the investor day, they reported earnings. We're recording this on Wednesday the 12th. They reported earnings last week. We actually raised our estimates over those 5 years because the AI growth just continues to exceed our expectations. So it generally fit with what we were expecting at the time, and still view them as conservative.
They are definitely conservative. They've given 5-year guidance in the past, and you can see that they just sort of blew the doors off the barn with that guidance. But then they
Yeah.
also tell you this. So on the call last week, Chantel, the CFO, said, and this is a quote, "In true Arista style, we remain pragmatic, yet are aware of the potential over the next few years." End quote. And she was talking about their guidance.
Yeah.
And then she said, here's one more, another quote. "I go back to kind of how we started," and she's talking about guidance again. "I go back to kind of how we started in early 2025, maybe even 24. Part of our style is to not assume 100% of everything hits to get the number, and we like to leave ourselves with some optionality." I'm interpreting this as they're telling you they guide conservatively.
Oh
They're
yeah.
they're telling you that they like to, under promise and over deliver. That's just their style.
Yeah. And they are pretty direct about it. So why not? And I understand wanting the optionality because maybe at one point this AI demand all comes crashing down. I mean, we don't think that's happening anytime soon, but I think it's important. I think listeners of this podcast, if you're considering an investment in Arista, yeah, you should expect them to beat their numbers. And one anecdote on that point, and this is something we've seen with some AI stocks elsewhere, but during the quarter, the stock sold off about 8% and they beat their guidance and raised their full year guidance, but it was relatively less than they usually do. And
Right.
so they are creating a rod for their own back in a
Mm-hmm.
sense
Mm-hmm.
because they still are beating guidance and yet the market viewed it as a miss and kind of rightfully so. Now, we actually disagreed with the market there. We raised our valuation because we really like the momentum and they raised their 26 guidance too in the same breath. So I think a bit of a myopic overreaction to a slightly weaker than expected beat, but that's it. Just I think that's a good point of color to show the market is totally aware of what's
Yeah.
going on here with that
Yeah.
conservative guide.
Yeah. Great point, Will. So we talked about the TAM, the total addressable market, large, over 100 billion. We talked about their top line revenue guidance for 26 or 27% in 2025, 20% in 2026, and then mid-teens, for the
Mhm.
4 years after that. Let's talk about like margins for a second because they're really high. Arista is an extremely profitable profitable business. It generates GAAP operating margins of 40% plus. And there are different ways of calculating return on invested capital, but I think their returns on invested capital are in the 30% range, higher if you subtract all that 10 billion in cash. So 30% returns on invested capital, 40% GAAP operating margins, 45% non-GAAP operating margins ish, in that range. Why is Arista such a high margin, high return business? Is it pricing power? Is it operating efficiency? Is it something else?
I think it's primarily pricing power. The 65% gross margin range is stellar. And I was talking, so much about how these strong, sophisticated customers, large customers pay up for the performance. And Arista just continues time and time again to give that to them. So they're able to charge a high price for, a very software based product that allows those high gross margins. And I think operating efficiency too, when they are able to achieve the growth that they are achieving, 2 years of 40+% growth in the past, now a couple years of 20%, high teens, they literally cannot spend enough. They have an operating margin target in the like low 40% range, and they are growing too fast. They cannot raise their spending enough to even achieve that. They're running above it. They're running at like a 48% non-GAAP operating margin. And so, A, that guide is a sandbag, as we talked about, but B, I think they have a true intent to spend more because they want to pursue this larger customer base of enterprise campus customers. And they are spending more. They're rising their spending at like a 20% clip, and yet they're growing faster than that. So most of the margin, I would say, comes down to the gross margin level and the pricing power. But, they just get a ton of leverage on those operating expenses. And I attribute a lot of that to this relatively concentrated base of large customers.
Yeah, and you talked about 48% operating margins, non-GAAP operating margins. That's a really good problem to have because they have margin to give. Like you said, like
Yeah.
they can invest in the campus, which requires, as you said, it's very high touch, you need a lot of salespeople in that side of the business. So they're going to have to hire salespeople, train salespeople, but they can make that investment because they have such high margins. They have a lot of margin to give. So if they ramp up investment, then they're still at 43% non-GAAP operating margins or something like that, which is still just astronomically high. And I think you hit on it, Will. It's, I think people look at this and are like, how does a hardware company generate 62% gross margins, 64% gross margins? Well, it's software infused. You're really paying for that EOS software.
Yeah.
And so it's a hardware company in disguise, or it's a software company in disguise, I should say.
Oh, absolutely. And I think we are going to touch on this too, but they have gotten questions in the past about, are they going to start charging subscription for EOS? And, that was very just in vogue over the past 5 to 10 years in general, software moving from a perpetual license to a subscription model. And just been pretty clear that they don't want to do that. They say that it's baked into the value of the hardware. We're not going to change this to a subscription model anytime. And it works for them. And I can't remember the last time they got a question about it. It's probably been a couple years because everyone just accepted that you can just take this company as is. They're doing very well that way, and they don't need to go by a subscription.
Like you said, it is the product. It's software infused hardware. Do you classify any of their revenue as recurring, even without that EOS subscription?
Yeah, they do have a small amount that is subscription. I would say like services contracts, things of that nature. But a very small portion. I consider nearly all of it, substantially all of it, to be sales of the hardware,
Yeah.
and the software is, yeah, as we talked about, baked in.
So you rate Arista as a wide moat firm. What are the sources of that wide moat?
It really comes down to the performance. I'm going to start sounding like a broken record, but
No, not at all.
what we would say is intangible assets in hardware and software design. And it just comes down to being multiple steps ahead of the competition in terms of designing the performance of that raw hardware, and maximizing that performance via the EOS software. And it is, I think software, as I said earlier, is the piece of that that is the hardest to replicate. Hardware, you can get the same chip from Broadcom and go white box, but you cannot replicate that EOS software. Even these largest of cloud players that have their own open source alternatives, they're still buying the EOS software because of that performance. So that is really the biggest piece of it. And then I think, what fuels that over the long term is their R&D. And we talked about their spending, and especially as they scale up now, 10 years ago, they couldn't match the R&D of someone like a Cisco because of their size. Now they can get close, and especially when you think of all of the little pockets that Cisco has to spend their money on, and Arista is just laser focused on this one section of the market, this one niche. And so we think that, now they've kind of reached this critical mass where they can outspend others that are trying to catch up with them and maintain that lead.
Yeah, and they have this wonderful team led by Andy Beckelsheim and Ken Duda. And so, at Morningstar, if there's a wide moat rating, you think that they can maintain returns on invested capital above their weighted average cost of capital for 20 years. And so you think it's a combination of the EOS software, the continuous spending on R&D. I think R&D is like 10% of revenue or something. So it's a big commitment. And then just that engineering team, and that's why you think it's sustainable for 20 years.
Yeah,
Yeah.
absolutely. I have nothing to add. You put it well. Yeah.
You rate management as exemplary. Why do you think they are exemplary? What stands out to you about their management style, their operating ability, capital allocation, corporate culture, whatever it is? What stands out to you as exemplary?
It is probably capital allocation, execution, but I think it really comes down to the right investments and the right vision over the past, 15 plus years that they've been in existence. And so investing to take advantage of the public cloud opportunity, also investing to be ready when the AI opportunity came to be, investing in the organic growth of the business. They don't acquire much compared to someone like a Cisco. They really do most of this stuff organically. And so focusing on that organic investment, as you said, they generate a ton of cash. They put a lot of that back into the business, but they still have a lot of dry powder to work with, as you said. So I think that capital investment into the business is really the biggest thing. And then the execution and the strong talent that they have. So all of the above, I think this is before my time covering them, of course, but as we talked about with kind of Jay Shree being the CEO, it was surprising to me at first that a tech company like this, had two founders that at first it felt like they were kind of, almost pushed out, and they weren't. They wanted to be involved with the tech, and I think that's an amazing decision. Jay Shree is a phenomenal CEO in my view, and I think that is shared by most people that follow the company. And so just a lot of pieces of the corporate culture that lead to the good execution and the vision and the organic investment.
No question in my mind, she's a special, special, special talent. One of my favorite CEOs that I have partnered with, by investing in Arista stock. No question about that. Will, is there anything we missed?
Ooh, wow. Well, we really hit on a lot. Let's see. No, I don't think so. I think we hit on AI, we hit on the campus push, we hit on Cisco, we hit on NVIDIA, the margin profile, capital allocation. No, I think we're set. I think, the one thing that I talk with investors a lot about is just the sustainability of AI spending and how long can this spending wave last. And I think what I keep coming back to on it is that at least in the short term, so say the next 2 to 3 years, everything is so supply constrained. And Arista on the last earnings call, part of what they attributed some of this conservative guidance to was supply constraints. And this is what we see with NVIDIA too, is that anytime NVIDIA beats, it's because they were able to secure more supply. They know the demand is well exceeding anything they can ship. And so that guidance is really based on supply. And I think what Arista is good at is being able to incrementally find more supply and beat those expectations that they lay out. And so, for the next 2 to 3 years, I just expect that supply constraint to endure, and that the level of this growth and demand can really sustain. And I think longer than that, maybe a little bit more of a question, but that's what I'm thinking about. I'd say over a 3-year horizon, say for Arista, is how sustainable that is. And I think with how constrained it is, I think it is.
That was the big takeaway for me from this wonderful, deep dive that you just did was networking is a bottleneck in these AI data centers. You don't hear about it though. You hear much more about compute,
Hmm.
not having enough compute, not having enough GPUs, or not having enough power. I don't think the lack of enough networking gear and software to really support this AI infrastructure build out is getting enough attention. But you clearly hit on it. They talked about it in the earnings call last week. They said they couldn't ship enough. Chantel, the CFO, talked about they're signing a bunch of purchase order agreements, which is driving up deferred revenue, which is a sign of that demand, but they just couldn't ship enough. So,
Hmm.
um, yeah, it's a story of supply constraints across the board: compute, power, and networking gear. So, wonderful discussion. Thank you so much for coming back on the show. I really appreciate you.
Yeah, absolutely. Thank you for having me. And we'll have to go round 3 sometime soon and pick one of your other stocks that I cover. So it's been a pleasure, John. Thank you.
There are a lot, and I'm already thinking about round 3. So I will be in touch with you. Thanks again, Will.
Terrific. Okay. Thanks, John.
Bastion Fiduciary is a fee-only SEC-registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions or personalized financial, tax, or legal advice. It does not constitute either explicitly or implicitly any provision of services or products by Bastion. All statements made regarding companies or securities are strictly beliefs and points of view held by Bastion or podcast guests, and are not endorsements or recommendations by Bastion to buy, sell, or hold any securities. Clients of Bastion or the host or guests of the podcast may maintain positions in the securities discussed in this podcast.